How much pushback? We talked about this before. Do you still get the same degree of pushback that you did a month ago? Or are more people listening and saying, wait a second, in the anecdotal data, this is starting to make sense?
Yeah, look, I mean, I think the question for investors is always price. I mean, we're in a late cycle environment. Let me just set the table a little bit, right? So we're in a late cycle environment for the last year. And when you're in a late cycle environment, there's a lot of uncertainty, right? I mean, people erroneously called for a recession in the first half of this year. It didn't happen. And now they may be erroneously believing in like this beautiful soft landing with some reacceleration next year. They probably overpriced that in the summer. So what happens is investors get whipped around by price action. And I would say what's happened in the last 2 months is we are seeing a breakdown again in a lot of the stock market. Okay, yeah, the overall averages are down 4 or 5%, not a big deal. But some of these consumer stocks are really, really struggling. And I think that reflects kind of what we were talking about a minute ago before we get on air, which is that the middle, lower end consumer definitely is out of excess savings. That's starting to bleed a little bit into the higher end now as well. We have the student loan moratorium. And I just think that's the wild card. That is the risk for the fourth quarter is can the consumer continue to surprise on the upside?
Tesla has changed the game of EVs. It's made the idea of owning an electric vehicle so appealing that almost everyone wants their own electric car. Or at least they want to drive one someday. As the industry continues to expand, investors may expect some sort of pullback in Tesla's growth, and this is to be expected. So will Tesla continue to grow, and what growth factors will this automaker need to put in place? Join us as we explore this interesting topic. Tesla's got a lot going for it in its quest for electrifying the future, expansion plans, and things like new models, production prowess, and innovative battery tech. There's pretty much no shortage of excitement in the Tesla world. But despite this progress, many still fear that Tesla may not be able to meet up with the demand. That the competition is swelling so much that Tesla won't be able to grow as much as it should, or even maintain its leading position. But is any of this really true? In today's video, we'll focus on how various initiatives by Tesla to keep its stock flying in high skies, and why Tesla stock is going to keep increasing over the next month or so, especially after passing its worst fiscal month so far. So without any further delay, let's get started.
Let's check in on some of today's top trending tickers now, starting with Tesla. Those shares are lower after Deutsche Bank cut its price target to $285 from $300. Analyst Emmanuel Rosner there says the EV maker could miss third quarter delivery and production expectations. The larger risk with Tesla, he says, is the downside expectations for 2024 on both growth and earnings. And Josh, I think safe to say Rosner's one of the more closely watched analysts who covers Tesla here. And it is interesting when he says his base case for Tesla is that it'll guide to about 2.1 million deliveries next year. Consensus is 2.3.
Yeah, what he says here is interesting because basically the note summarizes how there was this Deutsche Bank Investor Day, and what he heard at that Investor Day was that Tesla may no longer plan to expand output in Austin and Berlin factories. So he thinks Tesla will forecast, as you said, 2024 deliveries below the street. But he kind of sees a silver line there. If they're gonna, he says, not push so hard on volume, maybe he says that could be less pricing pressure. So he still rates this a buy.
Right. So maybe he says those automotive gross margins that people are watching so closely for Tesla could start to improve a little bit. We'll see. Well,
if you've ever thought about investing in electric vehicles, and particularly in Tesla, then you might want to hear what Ross Gerber's got to say. He's a stock price wizard. According to the Tesla stock price and analyst expert, investing in electric vehicles, and specifically Tesla, could be the most important investment scheme of the next decade. You see, the world is shifting gears, going full speed towards electric cars. Everyone is finally seeing the light when it comes to clean energy. And guess who's leading the pack? That's right, Tesla. Hey guys, welcome back to Tesla Tomorrow. There has been quite a bit of buzz about potential delays in Tesla's expansion into Mexico, and some people have also thought that this might not be a big deal, but it could have some medium-term effects on Tesla's growth. Expanding into new markets is a big part of Tesla's playbook, and Mexico is no exception. Therefore, any delays could slow down the company's plans and impact its presence in this promising market. While this may not be true, it shouldn't bother a long-term investor, and here's why. But before we get into that, don't forget to like and subscribe if you're liking this type of content, and ring that notification bell to keep up to date on everything going on with Tesla. First up, Tesla's growth strategy is pretty fascinating. the automaker is gearing up to launch a compact model, referred to as the Model 2, and this is going to be a big deal. The Tesla Model 2 is all about meeting the demand for a more affordable EV. This could open up a whole new world for customers who've been waiting for Tesla to fit something into their budget. At Tesla's recent Investor Day, its CEO Elon Musk told shareholders that Tesla expects to cut manufacturing costs in half, particularly through an updated set of manufacturing processes, and through its next-generation vehicle platform planned for production at its Gigafactory in Mexico. That scale of production is expected to help Tesla unlock vehicles with a sub-$30,000 sticker price, comparable to a traditional gas car such as the Toyota Corolla. This move will help increase mainstream EV adoption, since affordable electric cars mean more people can hop onto the EV bandwagon. It's like opening the door to the EV world for a lot more people. Tesla's Vice President of Vehicle Engineering, Lars Morave, shed even more light on the benefits of this move, and he said higher volumes of auto production mean lower manufacturing costs. The Tesla executive explained that this is while emphasizing how crucial manufacturing, as well as new generation EV platforms, are going to be to the company's ability to deliver long-term production targets. So Tesla is planning some major production upgrades. Big numbers, big plans. If Tesla is able to produce cars at a lower cost, then imagine how many cars the company will produce and how much sales it could make. It's going to be pretty groundbreaking. There's no doubt that Tesla isn't just sitting idle though when it comes to production. For one, the company currently has 2 factories capable of cranking out over 500,000 vehicles each year. That is a lot of Teslas hitting the roads. It's not just about cars. Tesla's battery cell lines are equally impressive, and this production muscle is what keeps Tesla ahead of the curve in the EV game. Batteries are at the heart of vehicles, and Tesla's successful manufacturing of these at large scale is a big deal. The thing is, Tesla knows that having high energy density cells is key to success. Specifically, the automakers eyeing the 4680 cells, which could be a game changer. These cells are crucial for producing longer or long-range EVs, beyond the compact Model 2. So it's not just about what's under the hood, it's about what the cells are going to be able to make possible. From saving the planet to cool tech and government perks, there are a lot of reasons why everyone wants to go electric. It's time for the EVs to shine. EVs may not be the most affordable types of vehicles, and they do have their own limitations, but more people are starting to see the benefits of owning one. At the moment, there's a big shift towards EVs, and one of the driving forces is the increased interest of electric vehicles and their fluctuating oil prices. Oil prices have become pretty volatile in recent years, and there is a high chance that that will keep going up in coming years. This uncertainty in the oil market has led many individuals and businesses to consider alternative options, such as EVs, to save costs and reduce their dependencies on fossil fuels. But here's the deal. Tesla is not just staying put. It's spreading its wings across the globe, meaning that it's making more moves to new markets, and that means more Tesla cars zooming down the streets worldwide. It is hard to believe that Tesla's growth strategy is looking forward, and it will be much different than what got it to this point. And that mainly involves selling more of its cars in more markets. It can also include introducing new models. For instance, several people have been waiting for production of the Cybertruck to start, and Tesla has also delivered a small number of its powerful semi-trucks with more interesting models. The Cybertruck particularly is not just a cool-looking vehicle, it's a potential game-changer for Tesla growth. So far, Tesla cars have been performing incredibly well in their markets, and we continue to expect more positive results in this area. How well do you think Tesla can grow in the next 5 years? Let us know down below, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the next few days, go ahead and click on this next video on your screen. See you there!